story that just will not go away. And I think we're going to be living it for quite a few years when you have the CEO of NVIDIA saying that his demand is insane and Wall Street is underestimating the numbers.
How much do you think they're underestimating it? Is there more surprise to come?
I think there is. We need to see what the demand is once the Blackwell chip, the AI chip, is released in December. But, you know, there had been some concern that they wouldn't be able to meet the demand. Now that has kind of softened. So I think everybody just wants to see how that the chip, the rollout of that starts hitting the markets. And is it everything that
Analysts at Bank of America increased their price target for Nvidia stock from $165 to $190 on Thursday, indicating a nearly 40% increase from current levels and reaffirming their buy recommendation. Additionally, BofA increased its pro forma earnings per share (EPS) projections for 2025 and 2026 by 13% and 20%, respectively. With an 80 to 85% market share, the bank thinks Nvidia is facing generational opportunity in a total addressable market, TAM, worth over $400 billion, which is a big increase over this year's forecasts. In addition to the company's excellent competitive posture, analysts added that a number of recent industry developments, including AMD's AI event, TSMC's recent blowout report, and strong Blackwell demand, have reinforced their optimistic outlook on the stock. They also draw attention to NVIDIA's software products and its underappreciated enterprise alliances with big companies like Accenture, ServiceNow, and Oracle. Offerings like AI Foundry, AI Hubs, and NAMs are important levers to NVIDIA's AI leadership, not only on the hardware side, but also on the systems/ecosystem side, they said, adding that the company's activities cover a variety of verticals. NVIDIA's free cash flow, FCF, at a 45 to 50% margin is around twice as high as the average of the so-called Magnificent Seven tech giants, which means it is still undervalued. According to BofA, over the next 2 years, NVIDIA's free cash flow, FCF, might reach $200 billion or more, matching Apple's and offering expansion flexibility, according to experts. According to BofA's bull case scenario, NVIDIA might surpass projections if the networking segment mix hits 17 to 18%, propelled by the expansion of its Spectrum switch and possible increases in Ethernet market share. In theory, this might result in sales in fiscal year 2026 of more than $200 billion. Additionally, taking into account changes in the system mix and improved yields from the Blackwell product line, gross margins could rise near the mid-70% range. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Bridget Bennett. It's a stock you've heard us talk about lots of times here on this channel, but we couldn't ignore another chance to talk about the tech giant with this recent rally. After some volatility over the last 2 months, NVIDIA is back on the rise and remains a top choice for most investors. And we're going to get into why this stock is rallying right now and how far analysts think this NVIDIA breakout could go. But first, here's a few things about this innovative company that have led to its nearly 200% gain in just the last year. So first, NVIDIA dominates the AI industry. What really makes NVIDIA stand out against competitors is its CUDA technology. Now, CUDA allows developers to use NVIDIA's GPUs for high-volume computing, not just graphics. This capability is essential for AI and data-intensive applications, and that really gives NVIDIA a competitive edge that others simply don't have. And that's why they're no longer just a semiconductor company. They're a key player in AI, cloud computing, and data centers. Now, all of those advancements and innovations are paying off in NVIDIA's financials, with revenue growth topping 200% in late 2023 and in early 2024. Now, even though that pace has slowed to about 80% in late 24, the numbers are still incredibly strong. And the outlook for 2025, well, many analysts expect another 40% to even 50% growth, though some believe they might be underestimating NVIDIA's potential. NVIDIA does have a record of outperforming expectations, beating consensus estimates in every quarter since 2022. They've also consistently raised their guidance, often by more than 500 basis points above what analysts were forecasting. This trend of beating expectations is likely to continue, supported by strong demand for their AI and GPU products.
In 2024, NVIDIA is doing very well. It started the year at about a split-adjusted $50, but it has now skyrocketed to about $130. The question now is whether NVIDIA can hit $150 before 2025 to ensure that its stock price triples for a second year in a row. There are still a lot of trading days until the end of 2024, which could lead to some surprises, but it doesn't have far to go. The artificial intelligence, AI, race has been closely linked to NVIDIA's remarkable ascent. Numerous businesses are working to create a cutting-edge AI model for their platform, while other service providers, such as the massive cloud computing companies, are boosting processing power by acquiring additional NVIDIA graphics processing units, GPUs. Because GPUs can handle several calculations at once, they are well suited for this task. You can process demanding AI tasks very rapidly if you combine that feature with the capacity to connect thousands of GPUs in clusters. Furthermore, these GPUs are not inexpensive. The H100, one of the more well-known NVIDIA GPUs, is thought to cost about $25,000 per. Therefore, it is reasonable to calculate that, when other components of the systems are taken into consideration, the cost of a company that uses 10,000 GPUs, such as Tesla's Dojo computer, is approximately $300 million. However, since GPUs are not a subscription service, NVIDIA must keep increasing its GPU sales in order to expand. NVIDIA's recent GPU architecture, Blackwell, is one element that might contribute to its growth. Compared to Hopper, the preceding generation, Blackwell has significant advantages. Compared to Hopper, it uses less energy and performs computations considerably more quickly. This might encourage some clients to update their current hardware, which might serve as a stimulus for additional expansion. The launch of Blackwell has been postponed several times, and is now expected to begin increasing production in the fourth quarter of 2024. Sometime in late November, NVIDIA will release its Q3 fiscal year 2025 earnings, which could provide the boost the stock needs to hit $150 before 2024 is over. High expectations are ingrained in NVIDIA's stock price. It is trading at 48.6 times anticipated earnings at the moment, which is a significant premium. Unless they are able to maintain significant development, most companies do not trade at this level for very long. Rather, either they meet expectations and its value gradually drops, or they fall short of those high expectations and investors sell the stock. The stock price then drops, which lowers the valuation. In order to provide shareholders with the profits they have been accustomed to, NVIDIA must continue to achieve the high standards the market has placed on its stock throughout 2025 and beyond. However, it is unclear if NVIDIA will reach $150 before the year ends. Given the amount of enthusiasm surrounding AI, I believe it is feasible, particularly if NVIDIA's Q3 fiscal year 2025 results are impressive. The results won't be known until the end of November. Additionally, there is an election between now and the results being revealed, and depending on the outcome, the market may do nothing or react violently in one direction or another. There are many unknowns when it comes to the future, but one thing is for sure. AI integration is just getting started. If NVIDIA is unable to reach $150 this year, I have no doubt that it will do so sometime in 2025, since we will require additional GPUs in the future to properly utilize AI's potential. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
When you look at the growth numbers here, what do you think we need to maintain, and where does the surprise come from? Is it just from the big hyperscalers that have already bought? Maybe they'll have to buy more, or the new customers? Where does that kind of marginal buyer at right now?
I think it's a combination of both, because when you look at how much a large company is going to have to invest in the GPUs and the data racks themselves, it's a lot of money. And I think there's a lot of mid-sized companies that have been waiting to make those investments because they are so expensive.
When you look at who's going to be competing, is there anyone with NVIDIA? Is it worth taking a stab at AMD and others?
Interesting question. AMD recently had an AI event where they showed their competitive chip, which is, I believe, it's called Instinct, with some long numbers and initials behind it. But it looks competitive, but I don't think the street was convinced that it is as competitive as NVIDIA. And we'll need to remember that this is going to be AI as a game where you're going to have to constantly innovate. And NVIDIA has 7 times the cash that AMD does. So they're going to be able to play that innovation game, right? It's going to be harder for AMD.
A nearby nuclear power source is a need for a cloud services company financed by NVIDIA to construct a new data center in Japan. Chief Executive Officer Wesley Kuo stated in an interview on Thursday that Tokyo-based Ubitis KK is seeking to purchase land in Kyoto, Shimaine, or a prefecture on the southern island of Kyushu, mainly due to the region's nuclear power availability. According to him, the company, which already operates 2 gaming data centers, intends to construct a third to support generative artificial intelligence. Nuclear is still the most competitive option in terms of cost and the scale of supply, unless we have other, better, efficient, and cheap energy, Kuo stated, adding that renewables like solar and wind power are too sporadic. AI in particular requires a steady, high-capacity supply for industrial application. As demand for steady, emissions-free electricity rises due to the use of AI and data centers, Ubitis, which received money from NVIDIA earlier this year, is one of many tech startups leading the worldwide nuclear power comeback. The titans who have recently invested to obtain access to atomic energy include Microsoft Corp., Alphabet Incorporated's Google, and Amazon.com Incorporated. However, given the sensitivity surrounding the 2011 Fukushima accident and the stringent regulations imposed in its wake, procuring nuclear power in Japan continues to be difficult. There are currently 33 commercially operational reactors in the nation, but several are still inactive. According to Kuo, Ubitis wants to choose a site for its new data center in the first quarter of next year. He has already visited locations in Kyoto and Shimaine and has plans to visit Kyushu as well. Additionally, Nippon Telegraph and Telephone Corp. already operates 2 gaming data centers in Japan. According to Kuo, establishing a data center in these locations would provide access to a system that provides reliable and affordable electricity. The U.S. IT firms, who have been inking agreements to directly buy electricity from or construct nuclear plants, take a slightly different tack. Electricity prices are typically lower in areas of Japan having nuclear power facilities, such as Kyushu and the Western Kansai region. While Kyushu is home to 4 nuclear power facilities run by Kyushu Electric Power Co., Kyoto is near multiple nuclear power plants run by Kansai Electric Power Co. In December, Chugoku Electric Power Co. plans to restart its Shimaine No. 2 reactor. With partners like Nintendo Co., the cloud-based gaming services provider was first established in Taiwan in 2007 and is currently headquartered in Tokyo. To be near gaming customers, its current data centers are situated in Tokyo and Osaka. However, Kuo stated that the magnitude of the energy supply and the cost of electricity become more important factors for generative AI. According to him, Ubitus intends to initially operate its new data center with a power receiving capacity of 2 to 3 megawatts, with the possibility of expanding to as much as 50 megawatts.